New fresh bid is before Parliament to cap bank interest rates at no more than 4% of the base rate set. Is this move achievable? We speak to Nuru Mugambi, who is the director at Kenya Bankers Association. Thank you for joining us. Is interest rates Parliament seeks to introduce good for the country?
So our view as the banking industry is capping of interest rates might not necessarily realize the goal that Parliament is looking for. What Parliament would like to see is more people accessing credit. Now, if we cap interest rates, what that does is tell banks this is how far you can price risk. So that means banks will become more discretionary in the amount of money they lend to mwananchi. Now, I think you can see it's actually counter to what Parliament is looking for. If you say that banks can only make a certain amount of money, then they will make sure they're lending to the people that they know for sure will pay back.
Is the government the only sole contributor to the high interest rates, or are there other crucial factors that are being overlooked?
Now, Treasury bill rates are a great indicator of what the cost of funds is. The second indicator is the interbank market. I don't know if you've been following, and the interbank market is how banks lend money to each other. Now, when we saw Treasury bill rates spiking in September, October 2015, a lot of people didn't realize the interbank market hit 30%. 20-30%, and that means the money that banks lend to each other. So banks lend money to each other and they price it because of the risk in the market, and banks will take that money and lend it to their customers. So I think overall the issue is around efficiency. How do we become more efficient? There's issue around pricing risk, efficient pricing of risk, which is why you see the credit information sharing initiative is a very important one, because what we're saying is we need to move away from product-based pricing. So it's an unsecured loan and everybody gets it at 25%. We need to move it to Carol is borrowing an unsecured facility and we know she has not defaulted and we know her risk profile is this based on her credit report. Therefore, we're not going to price it at 25, we'll price it at a lower rate.
Has KBRR both the desired effects it is meant to?
From our perspective as Kenya bankers, we've seen banks be most sensitive to competition, because you see that this disclosure is now on a like-for-like basis. What the central bank has done is make sure that interest rates, you remember there used to be what was called the base rate, and banks would announce our base rate is this. Now, on the back of that, each bank had its own calculation for the base rate. So there was no uniform way of really assessing our interest rates in one bank more cheaper than another. So what central bank has now done with this policy is make all the calculations uniform. So from that perspective, I think it has been a good move. There's still some work to be done around the formula, but from that perspective, as putting everybody on a level playing field and trying to stimulate competition around interest rates, I think it has done some work.
We've been speaking to Nuru Mugambi, who is the director at Kenya Bankers Association, where she tells us that capping interest rates will only hurt borrowers more. Debate on whether to cap interest rates ranges on. Do stay with us on Business Insight.